Welcome back to Investing Talk Podcast.
Great to be here.
Today we're tackling a question many of you might be asking. Is Kratos Defense and Security Solutions a good time to buy now?
Yeah, it's been on a tear, hasn't it? Lots of buzz around this one.
Definitely. We've gathered some in-depth analysis on this defense tech innovator. We'll be looking at everything from, their financial health and competitive landscape
To their current valuation, technical trends, and what analysts are saying. It's a full picture.
Exactly. As always, our mission is to cut through the noise, give you the most important nuggets of knowledge, and help you understand what truly matters in these complex topics.
Helping you make sense of it all.
Before we jump in, if you find our analysis helpful, please subscribe, like, and leave a comment. It really helps us out.
It really does. And let us know if there's another company you're curious about.
Absolutely. Drop us a comment below. We love hearing from you and looking into the companies you want to know more about.
We're ready to get started on Kratos.
Let's do it. Okay, let's unpack this. When we look at Kratos Defense and Security Solutions, what does the fundamental analysis tell us about its core business and recent financial performance?
Well, fundamentally, things look pretty solid, actually. Kratos reported strong Q1 2025 revenue, $302.6 million.
Okay, $302 million.
Yeah, and that wasn't just good. It surpassed their internal estimates. They've got robust momentum, particularly in their government solutions, and importantly, unmanned system segments.
So the growth is coming from the right places.
Seems like it. And if you look at the trailing 12-month figures, revenue is sitting at $1.21 billion.
Okay, and profit.
Net income is $14.5 million, which translates to an EPS, earnings per share, of $0.99.
9 cents a share. Seems kind of low on over $1 billion in revenue.
It does, and we'll get to why, but analysts are actually quite optimistic about future growth. They're forecasting annual revenue growth between, say, 9.7% and even up to 22.5% through 2029.
Wow, that's a big range, but the top end is impressive.
It is, and the consensus EPS projections reflect that optimism. They see $0.52 in 2025, climbing pretty steadily to 91 cents by 2029.
Okay, so they expect profits to catch up significantly.
That's the forecast. Now, what's fascinating here, and connects to your point about the low profit now, is that despite this growth, their margins are currently thin.
Right. Why is that?
It's largely down to heavy investment. Think research and development, infrastructure. Building out the capacity for these advanced systems isn't cheap.
So spending money to make money later, basically.
Exactly. It's a long game in defense tech. But the good news is profitability is showing signs of improvement as that revenue scales up. The investments seem to be starting to pay off.
Okay, that makes sense. They're growing and investing. How solid is their overall financial health then? And where do they stack up against competitors?
Good question. Kratos isn't actually highly leveraged compared to its peers, which might surprise some people given the investment levels.
Okay.
Yeah, they've kept debt levels manageable, and importantly, they consistently generate positive operating cash flow.
That's key, right, for funding that R&D.
Absolutely crucial. It supports their ongoing R&D and capital expenditure without them getting into too much debt. Their market cap is around, $9.95 billion now?
Almost $10 billion.
Yeah, and they seem to be balancing that healthy cash flow with these big expansion investments pretty well. We're not seeing any signs of liquidity distress in the recent results.
So financially stable, despite the spending. What about their competitive edge then? What makes them special in this crowded defense space?
Well, Kratos is really well positioned. They specialize in these high-growth areas everyone's talking about. Unmanned systems, drones, basically, plus satellite ground systems, and even hypersonic vehicles.
Yeah, the cutting edge stuff.
Very much so. And a huge tailwind for them, you really can't ignore this, is the recent push from the U.S. Department of Defense to speed up domestic drone production.
Cutting through the red tape.
Exactly. It's removed some of those bureaucratic hurdles that used to slow things down. And Kratos' ability to quickly bring lower cost, but still high functionality, solutions to market is a core advantage. The Pentagon wants agility now.
Interesting. So they're like a nimbler player. The DoD is starting to favor more.
That seems to be a big part of the story, yes.
Okay, that's a compelling business story, especially with those defense spending tailwinds. But the valuation. Is the market already paying a premium for all this good news?
Yes. This is where it gets, let's say, really interesting and maybe a little concerning for new buyers.
Uh-oh. Lay it on me.
Let's look at their valuation ratios. The trailing 12-month price to earnings, the PE ratio, it's a staggering 624.4.
624.
Yep. Not a typo. And even the forward PE looking ahead is 100 to 1.1. Their price to sales ratio is around 8.2.
Okay, give me some context. How does that compare to the industry?
Right. To put that in perspective, these ratios are significantly higher than defense industry averages. Typically, PE in defense is maybe 15 to 25.
15 to 25 versus 600.
Exactly. And price to sales is usually around 2 to 5. Kratos is at 8.2. It clearly indicates a very rich valuation. There's a substantial growth premium already baked into that stock price.
So the market is betting heavily on future perfection.
You could say that. It makes using standard valuation models like discounted cash flow pretty tricky because the low current margins get swamped by those huge growth expectations built into the price.
Okay, so models struggle. What are the analysts actually saying the price should be?
This is also fascinating. The analyst consensus 12-month price target is $48.33.
$48.
Yeah.
But the stock is trading around $59 right now.
Precisely. That consensus target is about 18% below the current price. It strongly suggests that analysts, even the bullish ones, think the stock might be overextended at these levels.
Wow, so even the fans think it's gotten ahead of itself.
Seems that way. And multiple independent forecasts also predict some near-term downside, maybe negative 10% to negative 20% over the coming months. Now, the longer-term sentiment is still bullish, but that's with a big if. If the company executes flawlessly on those ambitious plans.
A very big if when you're paying 600 times earnings.
You got it. High expectations, high premium.
Okay, so the fundamentals are strong, growth story is there, but the valuation looks stretched, maybe even precarious. What do the technicals say? What's the chart telling us about the recent price action and momentum?
Well, the chart definitely reflects that enthusiasm. The stock has surged nearly 200% over the last year. Just incredible performance.
200%.
Yeah. It's been trading in a 52-week range from about $17.91 up to $62.80. And right now, hovering around $59, it's definitely near its all-time highs.
Okay, so near the peak. Are there clear support and resistance levels?
Yeah, we see strong support building in that $48, $52 zone. That's where buyers have stepped in before.
Aligning with that analyst target range.
Exactly. And resistance is clearly at that recent high of $62.80. It hasn't been able to punch through that decisively yet.
Okay. What about key indicators like moving averages or RSI?
Right. Looking at those, the 50-day simple moving average is around $47.57. The 200-day SMA is much lower, $34.02.
Both well below the current price.
Correct. Which clearly signals strong bullish momentum. The trend is definitely up.
Okay, trend is positive. Any signs of it being overbought or losing steam?
Well, the 14-day relative strength index, the RSI, is at 52.03. That's actually quite neutral.
Not overbought or oversold?
Nope. Right in the middle. Which is interesting. It could mean there's room to run, or maybe it's consolidating before its next move. The MACD moving average convergence divergence is positive and rising, suggesting momentum is still building upwards in the short term.
Like there's always a but.
But the volatility is around 12%. That's higher than the market average, reflecting those big momentum-driven swings we've seen, especially as it gets near these highs.
So strong uptrend, positive momentum, but maybe hitting resistance and showing higher volatility. Needs watching closely.
Definitely needs watching.
Okay, technicals show momentum, but maybe some caution near the highs.
Yeah.
What's been happening on the news front? Any recent developments or shifts in sentiment that could push it one way or the other?
Well, the big one we mentioned earlier was the U.S. Defense Secretary removing those restrictive drone procurement policies. That was a major boost for Kratos' outlook.
Right, potentially opening the door for more contrast.
Exactly. And analyst sentiment, as we noted, is broadly bullish. 12 analysts rate it a buy.
But with that price target below the current price.
Correct. That's the important caveat. It signals caution specifically because of that high valuation. Buy rating, but maybe not at this price.
Got it. What about insiders? Are they buying or selling?
Interestingly, there hasn't been any notable insider selling or buying reported in recent updates. Kind of a neutral signal there.
Okay. And social media? Still buzzing.
Social media sentiment seems pretty bullish, lots of enthusiasm, but, if you connect this to the bigger picture, the broader market mood measured by things like the fear and greed index is actually leaning towards fear right now.
So general market caution could be a headwind, even for a hot stock.
It certainly could, yeah. Sometimes market sentiment can drag everything down, regardless of individual company news.
Okay, putting it all together then. Strong underlying business, exciting niche, but that valuation hurdle seems huge. What are the potential catalysts that could push it higher despite the valuation, and what are the big risks investors need to keep front of mind?
Okay, catalysts. Short term, the big one is their Q2 2025 earnings report. That's scheduled for August 7th. A strong beat and raise could definitely give it another leg up.
Earnings are always key for high-growth names.
Absolutely. And related to that policy change, any announcement of new defense or military contracts, especially significant ones, would be a major positive.
Makes sense. What about longer term?
Long term, the really big catalyst would be broad adoption of their unmanned aerial systems, their drones, by the DoD and allies. If they become a standard platform, that's huge recurring revenue.
Game changer.
Potentially. Also, those evolving regulatory priorities favoring domestic producers like Kratos are a continuing tailwind. And you can't rule out M&A.
Acquisition target.
Possibly. A larger defense prime wanting quick entry into the unmanned space might see Kratos as attractive. And then there's the macro picture. Unfortunately, ongoing geopolitical tensions tend to keep defense spending high globally.
Right. A somber reality that benefits the sector.
Yeah.
Now, the risks. You mentioned the valuation.
That's number one, absolutely. That high valuation leaves zero room for error. Any disappointment on earnings, contracts, or tech delivery could lead to a sharp correction.
The execution risk is high then.
Very high. Delays or failures on big programs would hit the stock hard. And competition is always a factor, not just from the big guys, but maybe new tech startups too.
And broader market risks.
Yeah. Defense budgets can change with political cycles or shifting government priorities. That's always a background risk. And if the whole sector sees valuations pull back because of interest rates or a weaker economy, Kratos would likely get caught in that too.
Okay, lots to weigh there. So if we connect all this to the bigger picture, what's the overall investment thesis for Kratos Defense and Security Solutions right now? Is it a buy today?
Well, synthesizing everything, our overall rating for Kratos comes out at 5.5 out of 10.
5.5. So pretty neutral, leaning slightly positive maybe?
Sort of. Here's the rationale. Kratos absolutely has strong business momentum, a great competitive spot in key growth niches like unmanned systems and hypersonics, and those positive industry tailwinds from defense policy are real.
Okay, the bull case is clear.
It is. However, the near-term upside looks really limited because of that steep valuation. As we saw, analyst targets, independent models, they all point towards downside correction risk in the next 6 to 12 months.
The price has just run too far, too fast.
It seems that way. While the long-term story is promising, the current stock price already reflects a huge amount of that future success. There's just not much margin for error or for further upside surprise in the near term.
So what does this all mean for someone listening who's thinking about investing? What's the suggested approach here?
Right. For most investors looking long-term, Kratos is probably more attractive, but really only if you can get in on a pullback.
Wait for a better price.
Exactly. In the near term, the stock looks quite vulnerable to profit-taking, or that multiple contraction we talked about, where the PE ratio shrinks back towards normal levels. So probably not advised for short-term trading at these current prices.
What kind of price would be a better entry point for long-term folks?
Well, based on the technical support and those analyst targets, somewhere in the 48-52 law range looks like a much more reasonable entry zone.
Okay, patience required. What about more active traders?
For tactical traders, given the high volatility, using a stop loss is critical. Maybe setting one around $44 just below that key technical support.
To limit losses if it does pull back hard.
Right. And a take profit target might be around $62, maybe $65 near those recent highs. But you'd have to reassess quickly if it actually broke out above that resistance.
So manage risk carefully.
Absolutely. The key things here are the high volatility and the strong momentum it's had. So tactical traders need tight stops, and long-term investors probably best advised to be patient, wait for that pullback towards the $48-52 area, or maybe wait for a broader sector correction before jumping in.
Patience might be the key virtue here.
It often is with stocks that have run up this much.
So what stands out most to you from our look at Kratos Defense and Security Solutions?
For me, it's that stark contrast. You've got this really exciting company in the right space, doing innovative things, benefiting from policy shifts.
The story is great.
The story's fantastic, but then you slam into that valuation wall. It just feels like the market has already priced in several years of perfect execution.
Yeah, that disconnect is really striking.
It really is.
As we wrap up this look into Kratos, it leaves us with this provocative thought. In this dynamic world of defense technology and high-growth stocks, how much future potential are you really willing to pay for today?
And when does patience become the most important part of your investment strategy, especially when that future growth seems so clearly embedded in today's price?
Something to definitely mull over.
Yeah.
Thanks for joining us for this analysis of Kratos. Remember to subscribe, like, and comment.
And let us know what company you want us to investigate next.
We'll be back soon with more insights to help you stay informed.